Have you been told that you need to purchase a surety bond? Maybe it's as collateral for a loan, or maybe it's to ensure that you pay sales tax for products that you're selling. If so, this type of surety bond is typically called a financial guarantee bond. It's a promise of some future payment. And I want to make sure in this video that you understand what a financial guarantee bond is, common types of financial guarantee bonds, and edge cases where getting bonded becomes difficult, if not impossible. Before we get too far into the video itself, if you get value from this video, and this is a weird one, but if you get value from it, you kind of understand what a financial guarantee bond is, hit that like button for me. Let me know that I'm actually adding a little bit of value to your life and to what you're going through right now. I'd appreciate it. Let's get started with, what is a financial guarantee surety bond? First, let's start with, what is a surety bond? So a surety bond is a legal contract that acts as a guarantee that you're going to do what you say you're going to do. Lots of different industries require surety bonds. A financial guarantee surety bond is essentially a legal contract that acts as a guarantee that you're going to pay back money to some third party. So if you don't pay back that money, that third party can make a claim against your surety bond for financial compensation. That was a kind of a high-level definition. Let's look at 4 examples of common financial guarantee surety bonds, and it'll become real clear as to the role it plays and what it is. The most common types of financial guarantee bonds. All right, example 1 is going to be wage and welfare bonds. A wage and welfare surety bond is purchased by an employer who's going to be hiring union workers. Essentially what happens is every union has a collective bargaining agreement that guarantees things such as wages, fringe benefits, hours worked, vacation time, all sorts of different aspects to how they're going to be working. So the union wants to make sure that the employer purchases a wage and welfare surety bond to guarantee that their workers are going to get paid according to that collective bargaining agreement. If the employer somehow cheats them, doesn't pay them the correct wages, the union can make a claim against that surety bond for compensation to make sure those workers get the money that's owed to them. That's example 1. Let's look at another one. Another common example is sales tax surety bonds. Lots of different businesses are required to purchase a sales tax bond. The most common examples are businesses selling alcohol and tobacco products, lottery tickets and games, fuel, as in different types of gasoline. So these businesses, what's happening here is these businesses collect sales tax at the point of purchase. And it's up to them to account for the correct amount of sales tax so that they can pay it to the state, either the Department of Revenue or the Department of Tax. So when they go get a license or registration to sell and do what they're doing, the Department of Revenue or Tax is going to say, go buy the surety bond because I want to make sure that we get the right amount of taxes. So if they somehow purposefully fail to pay those taxes, either the correct amount or just fail to pay it all together, the Department of Tax or Department of Revenue can make a claim against that surety bond, and as you guessed it, they'll get payout for financial compensation for what's owed to them. Let's go look at another example. Example 3, this one's a little bit different. It's called a utility bond, and this is what happens when a business is going to use a large amount of some utility right up front and accrue a big bill. Here's an example. Let's say a business rents a warehouse, and inside the warehouse, they're going to obviously have all the electricity running, but also they have machinery. So the utility company is going to say, you're going to be using a ton of electricity right off the bat. You're going to accrue this giant bill. I want you to purchase a utility surety bond to make sure that you're going to pay that bill. And as you would guess, the same thing. If they neglect to pay the bill or don't pay the schedule that is agreed upon, the utility company can make a claim against that surety bond and get the money that they're owed. Let's go over one more example. It's a little unique. All right, so this last example, like I said, it's a little bit unique. It's called a lost security bond. It usually is required when a person has a large cashier's check or maybe an old stock certificate from a business that gets lost. And what happens is this person's going to be like, I want my cashier's check or stock certificate back. So they're going to go to the bank or the business and say, I lost this. Can you replace it? The bank and business or business wants to obviously replace this, but they don't know if the person's being completely forthright. Let's say they want to avoid the situation where 6 months down the road, all of a sudden the stock certificate gets cashed in or the cashier's check gets cashed and now they're out double the money. So what they're going to do is they're going to require that person to purchase a surety bond, a lost certificate surety bond, to make sure that that does not happen. So if there is some tomfoolery going on and the check gets cashed, they can make a claim for the amount of money and get their money back. That's kind of how this one works. So it's almost like it's not really a guarantee for future payment, it's a guarantee for payment if fraud happens. So those are the most common types of financial guarantee bonds. If you need one of those, we can help you today, and I'll get to who we are in a second. But first, let's look at a couple edge cases where getting bonded is going to be near impossible. Financial guarantee bond edge cases. So I'll get again to who we are, but we get requests every single week for a type of surety bond they call financial guarantee bond to be used as collateral for a loan. Typically, these loans are going to be private loans. And anytime you need a bond for a private loan, it's going to be almost impossible to underwrite. The reason is, first, let me say a surety is the insurance company that underwrites surety bonds, and they're going to want to know everything about this loan. First off, the person giving you the loan probably doesn't have history of giving private loans. They're going to want to know all the financials of the loan itself and how you're going to use it. They're going to look at your credit history and say, do you have any history at all of taking private loans, which you probably don't. Most people don't. And it's just too risky. A weird case could be where you have a small local bank that says they're going to give you a loan and they're going to be like, go get a surety bond. It's a financial guarantee. But the truth is they don't actually understand surety bonds fully. They just know like, oh, financial guarantee, go get one of those. Turns out that the surety is not going to underwrite those. They don't, like a small bank just doesn't have enough clout or history for the insurance company to be like, this makes sense to us. So they're always going to deny this too. And then one other very common edge case that we get a lot is if somebody is purchasing products from an overseas manufacturer, that manufacturer might say, go get a surety bond to guarantee that you're going to pay for these products. Two things. First off, that's never going to happen because the surety, again, is like they don't know who the foreign company is. And the biggest reason is anytime you need a bond being required from a foreign company or a foreign country, they're going to deny it every single time. So the bottom line is if you need a bond to act as collateral for a loan, go back to whoever's giving you the loan, explain that you're not going to be able to get bonded, and find another solution to your problem. I just want to let you know about that. So let's recap everything. Let's recap financial guarantee bonds. Okay, the most common types of financial guarantee bonds, ones that we can help you with, and again, I'll tell you who we are in a second, are things like union or wage and welfare surety bonds, lost security surety bonds, utility bonds, sales tax bonds, things like that we can help you with. Again, we just went over it, but if you need a bond to act as a collateral for a loan, we're not going to be able to help you. It's going to be hard for you to get any help from anybody. So again, go back to that person and figure out a new solution. We are Surety Bonds Direct. We're a specialized surety agency, and it's our job to find our customers the lowest possible price. We work with multiple A-rated sureties to find you the lowest price. So if you do need one of these bonds, give us a call, fill out a quote form. I have a link in the description where I have some good articles for you to read, but also you can fill out that quote form and you can get pricing and we can help you kind of get to that next step. If you understood this video, if you got value from this video, hit that like button for me. Let me know that I added a little bit of value to your life, and good luck with whatever it is that you're trying to get to in that next step. Thanks for watching.